Today, Bitcoin prices break through the 47K level, at least for a bit. MicroStrategy gets in on the Bitcoin buying action again. And we talk to an energy company that's using excess natural gas to power crypto mining rigs. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Bitcoin prices briefly crossed the 47,000 level today before falling back to earth. Ether prices rose just slightly, about 0.5%. XRP was up about the same. But one of the biggest moves today was Dogecoin. Yes, Elon Musk made more news. We'll have more on that in a bit. First, we spoke with Ledn co-founder and chief strategy officer Mauricio Di Bartolomeo about what investors should be watching this week.
There's three main things that we are looking at for this week. In particular, one is the Miami Bitcoin Conference, which kicks off this week. It's the largest event in Bitcoin history. We're going to have a big part of our team there, and we're going to be participating in a Bitcoin mortgage panel. But if we look back in history, that same conference last year gave us Bitcoin City from El Salvador, and many great announcements. Many big celebrities are taking the stage this week, so there could be some big news coming out of that front that could potentially move the market. We're also continuing to look at the Luna Foundation Guard plan to purchase up to 10 billion worth of Bitcoin. They seem to have the green light to continue up to 3 billion, and they have purchased up to 1.3 so far. And the last thing that we also look at and think it's a very interesting trend is we're starting to see big banks like Citigroup starting to come out with price targets for the value of the metaverse. Last week, they put out a report potentially pricing it between 8 to 13 trillion. And this is a very interesting progression because in August, we saw Citigroup consider Bitcoin futures, August 2021. November, they put out a hire for 100 new crypto members of their team. And then fast forward until today, we're starting to see some of the price targets on the metaverse and some leaked reports on Bitcoin valuations. So I think this is a trend that will likely continue. What could potentially explain some of the difference in volatility that we have seen recently between assets like NFT and assets like Bitcoin? I think the recent price action is perhaps an example or a result of the most active investor bases in those particular asset classes. If you look at Bitcoin's investor base, most of the transactions, especially from the latter half of last year up until now, have been basically carried out by entities that hold large balances of Bitcoin in their addresses, which means that there is a lot of institutional activity still in Bitcoin. If you look at Bitcoin, it's an asset that has futures on the CME, options, and so it's got a lot more of a suite of institutional products that they can interact with. Contrary to NFTs, where you don't necessarily have that same accessibility from an institutional standpoint to participate in those assets. And so what we have seen in Bitcoin is that when institutions have come in, they've created a bit of a bid or added more stability to the price volatility, but we have not seen them yet get as active in, say, NFT and other types of assets, which in my view, would cause more volatility because there's just not as much depth in the order books. There's a couple of important events that I think are upcoming in the summer that I think investors should be on the lookout for. One is the upcoming SEC's decision on GBTC Grayscale Bitcoin Trust conversion to an ETF. That decision is scheduled in June, and you're starting to see the Grayscale saying that all options are on the table, depending on what can come out after this decision. So I think that could potentially be a catalyst for Bitcoin prices, depending on the result of that decision. And then the other interesting thing that I think is lining up for the summer is the Ethereum merge. So in the summer, there will be an event where Ethereum will change its consensus algorithm or protocol from proof of work to proof of stake. This is a very material change to the protocol, and it will have ramifications both in the mining side as well as on the investment side. So there will likely be a lot of activity around those two events. So those would be the ones I would zero in on.
Now for the top stories. The U.S. branch of crypto exchange FTX just announced an investment in IEX, a national stock exchange in the States. The two companies now plan to work together to create a market for digital securities. The deal should close in May 2022 after going through the regulatory red tape. Neither FTX nor IEX disclosed the numbers behind the deal. Michael Saylor's MicroStrategy, which is one of the largest corporate holders of Bitcoin, just placed another big buy. In an SEC filing, the company said it bought about 4,100 Bitcoins for about $190 million. The buying took place between February 15th and Monday, April 4th. MicroStrategy now holds about $6 billion worth of Bitcoin. Elon Musk made some more news this morning and Dogecoin prices surged again. Notice a pattern here? A day after announcing he was taking a 9.2% stake in Twitter, Tesla CEO Elon Musk was named to the social media company's board. Twitter stock popped on the news, and so did Doge. Prices of the meme crypto jumped as much as 12% in the past 24 hours, continuing its Musk-driven rally from Monday. Now for our main story. Crypto gets a lot of criticism for not being environmentally friendly. Bitcoin mining and its proof-of-work structure calls for more and more computing power as more Bitcoin enters circulation. That all means more and more electricity. Now, one solution is coming from the oil and gas industry, of all places. Crypto World's Mackenzie Sigalo sat down with Crusoe Energy's Cully Cavness. His company uses excess natural gas to power crypto mining rigs in remote oil fields.
Crusoe Energy Systems helps oil companies turn wasted energy or flare gas into a useful resource. Now, a lot of people who are not actively following the space have no clue how oil and gas relate to Bitcoin mining. So let's start by just breaking down how this actually works in real terms.
In the most basic terms, there's more than 10 billion cubic feet of natural gas being flared every day around the globe. That's enough wasted energy to power the Bitcoin network more than 8 times over. And the reason why this happens is because often oil wells are drilled searching for oil, and gas is a byproduct of most oil production. And in many cases, most cases, that gas has a pipeline available to go to a traditional market, power generation, heating, that kind of traditional end-use market. But in some percentage of the cases, globally, it's as much as 20% of the oil produced is produced in a place where there isn't sufficient gas pipeline takeaway or none at all, and that gas is flared. So it varies regionally, but in every continent, you're going to see different percentages of gas being flared. And in aggregate, it's a huge volume. So what we do at Crusoe, we really pioneered this idea of bringing large-scale power generation and modular data centers for Bitcoin mining to the wellhead. So really bringing the demand for power to the place where the energy is being wasted.
So you've deployed more than 80 data centers, many of which are in the Bakken, an area that spreads across Montana, the Dakotas, and into Canada. So why there?
The Bakken in particular was our first home, and that's an area where the takeaway gas lines that take most of the gas to other markets, periods in history, they get full and they just can't accept any more gas molecules. And so there are a lot of oil wells being drilled, and there have been periods in the Bakken's history where that basin flares 20% or more of the natural gas that it produces. But the state really does care about trying to reduce those flared volumes. The operators care. And it's a place where we were sort of welcomed with open arms. All right, if you can bring a solution that makes sense economically and operationally to eliminate these flaring volumes, let's do that. And so time and again, we found that operators, especially the larger public and private operators, needed a scale solution.
So in the last few months, we've seen this idea of oil and gas majors getting into Bitcoin mining really normalize. Announcements about ConocoPhillips and Exxon having skin in the game didn't do much to their share price. And if anything, a lot of people are actually making the case that this serves their overall ESG narratives quite well. I wonder if you have any thoughts on this.
That's really how we've positioned Crusoe, is we're trying to build the largest scale and most ESG and climate aligned Bitcoin mining company in the world. Really, we feel there's no better way to produce power for Bitcoin than to capture otherwise flared natural gas. There's also some very interesting strategies around renewables and other carbon-free sources of power that are getting a lot of attention, and they should. But in terms of eliminating methane in a 24/7 process that can really scale, that's so exciting from both an economic and environmental standpoint. That's what we're really building out here at Crusoe. I was the keynote speaker at the Digital Wildcatters conference in Houston over the last couple of days, which was really a conference around energy industry and Bitcoin coming together and talking about these solutions. And my whole keynote was about learning the lessons from the shale industry's recent history that would be important to learn for Bitcoin's second decade. And if we don't learn about the importance of public perception, reputation, ESG, listening to and actually responding to and acting on the legitimate climate concerns, then history is going to repeat itself, and you're going to see the same kind of sort of public scrutiny, pushback, and regulation that in some cases maybe went too far. That could have been addressed through more communication and engagement and dialogue. We can probably see the same dynamics playing out on the Bitcoin side, and it's about getting ahead of these things and talking about them and actually acting on them with good, clean energy sources and ESG aligned strategies.
Now, with the U.S. blocking Russian energy imports and President Biden pushing for more oil drilling at home in the U.S. to tamp down on prices at the pump, what does this mean for Bitcoin mining off flare gas? Are we about to see a surge in this business?
Well, to meet the demands on the oil side, what that's going to mean is a lot of drilling, and pipes take a long time to build and permit and finance. Pipelines are long-term projects. So in the near to medium term, a lot of folks across the industry are expecting to see flaring volumes likely increase in the absence of a solution like a Crusoe that can come out and actually deal with those volumes in a way that's not a pipeline, because we can deploy pretty quickly. We can be on site much faster than a pipeline can typically. In the longer term, we should and we will build pipes, but there's always this mismatch between upstream and midstream. Upstream is usually ahead, running really fast, and then midstream will build once those volumes are online and established. And Crusoe fills a nice role in being able to smooth the relationship between the two and capture the volumes when they're being flared at the upfront phase of one of these expansions, until the pipelines can catch up.
Before we go, we wanted to let you know that we'll be on location from Miami, Florida starting tomorrow, reporting from the Bitcoin 2022 conference for the rest of the week. That's all for Crypto World today, but we'll be back again tomorrow and we'll see you then.